There are so many ways to build wealth, and you're not going to find me arguing that point. However, for someone like me who has a 9 to 5 that I really enjoy, an amazing wife, awesome kids, and things I do in the community, I've realized that I just need the simplest and most effective way to invest and build wealth, and it only involves investing in 2 ETFs. Now, I am no financial advisor, but this is a passion project of mine, and this is what I love to do, talk about personal finance. I started investing in mutual funds through my 401k since 2010. And I can tell you that that was probably the best decision that I ever made in my early 20s. The big financial lesson that I have learned over the years is that index funds and ETFs are arguably the most effective assets that you can buy to build wealth. And some people prefer ETFs over index funds, and that's fine because I understand maybe you want to be able to trade those ETFs throughout the day. And unfortunately, mutual funds, index funds can only be traded once a day after 4 p.m. after the market closes. So which 2 ETFs am I going to target in 2023 to have in my investment portfolio? Well, I'll go ahead and tell you right now, it's VTI as well as VB. Now, the first ETF is one that I already have in my Roth IRA, VTI. This is Vanguard's total US stock market ETF. Year to date in 2022, VTI is down 16.98%. However, the average annual rate of return since 2001, since this ETF started, has been 7.85%. So if I invested $100,000 in this ETF 21 years ago at its inception date, today I would have about $488,000. This ETF is currently trading at $198.24. I like this ETF because the expense ratio is 0.03%. So if you invest $1,000 in this ETF, you're only going to be paying 30 cents to have $1,000 worth of this ETF. And currently, this ETF invests in 4,028 different stocks. That is great diversification to have in your portfolio because you're going to get exposure to almost every single US publicly traded company. And that's one of the main reasons why I like this ETF. I'm getting exposure to almost every single US publicly traded company. Having the US total stock market ETF, that's what you are buying. You're buying a piece of every single US publicly traded company, and you're investing and continuing to invest in those companies through this ETF. One ETF that invests in over 4,000 different companies here in the US. And I think that's just a complete win all around because I am going to have some of those smaller companies in this ETF that may perform well in the future. And I'm going to have a little piece of those companies as well as the good growth stocks, the S&P 500 companies like Apple and Google, Berkshire Hathaway that are also part of this ETF. Now, the next ETF is a little bit different, and this is VB, Vanguard's Small Cap Blend ETF. Why do I like this ETF? Because you are going to be adding a little bit more exposure to your portfolio to smaller companies that tend to outperform over the long term your big companies. The inception date of this ETF, VB, is January 26, 2004. And since its inception date, this ETF has had an average annual rate of return of 8.97%. And remember, VTI's average annual rate of return since its inception date was 7.85%. And the next question you might be asking is, Matt, since the inception date of this ETF, it has had a higher average annual rate of return. Why not just put all my money in VB? Personally, I don't want to do that. Maybe I'll do like a 50-50 split going into 2023 with all the money that I'm going to be investing, because VB is only invested in small capitalization stocks. So I am going to be missing out on a lot of those S&P 500 companies that this ETF does not invest in. However, VTI does invest in your S&P 500 companies. And the money that I do invest in VTI is cap weighted so that more of the money goes to the larger capitalization stocks. So if I invested $100,000 in VB since its inception date 18 years ago, today I would have about $469,000. And I personally like VB's expense ratio at 0.05%. So for $1,000 that you invest in this ETF, you're only going to get charged 50 cents for that $1,000. $1,000. That is a low amount of fees that you're going to be paying for this ETF, and it's on par with VTI's 0.03%. This ETF is currently trading at $189.49. And because this is a small cap blend ETF, it is going to have a lot more stocks in this ETF than VBR, which is the small cap value, and VBK, which is the small cap growth. And I'm fine with that. I like that because I get a blend of all the different stocks, the growth and the value stocks in this small capitalization asset class. So the total number of stocks in this ETF is 1,495. So let's say you start investing in VTI and VB over the next 30 years. You're investing $500 a month in VTI and you're investing $500 a month in VB. Well, based on the historical data of VTI's 7.85% average annual rate of return and VB's 8.97% average annual rate of return, I'm not saying this is going to continue in the future. It likely won't. It probably will be a little bit less, but you never know. It could continue to perform this way over the long term if you invest the $500 a month into each of those funds based on the historical data. Over the next 30 years, you continue to put $500 a month in each of those ETFs. After 30 years, you can expect to have about $1.47 million. Now, the important part that you need to understand is that final number could be lower, could be higher. What gives me confidence in investing in these ETFs is listening to people like Warren Buffett, Paul Merriman, J.L. Collins, who talk about Vanguard's index funds and ETFs that have performed historically well, and the expectation is that they will continue to perform well, especially the US-based ETFs and index funds, because the US economy, companies in the US are strong companies that have persevered through so many ups and downs. And that's what I want you to also expect. As you're investing, part of that expectation is having years like the one we had in 2022, where the market is going to be down 16, 17, 20% almost, where you see some stocks that are down almost 40%, 30%. And years like this are to be expected over the long term. You're going to have good years, you're going to have bad years. The main important part is that you stick with your investment strategy and you stick with it for the long term. I personally will continue to buy VTI and I'm going to start buying VB over this 2023 year, and we'll see how VB does as I introduce it into my investment portfolio. And I'll definitely do a follow-up video to just check in and let y'all know how VB is doing and how my overall portfolio is going to be doing in 2023. Let me know what your investment strategy is going into 2023, and if you're interested in learning about the pillars of financial independence, then check out the video on the screen right now, and I'll see you over there. Peace.